Well, jobs weakness means lower mortgage rates. Hey, it's Eric Osnes here with ericismybanker.com and CMG Home Loans with my weekly update on mortgage rates for the week ending November 3rd, 2023. Well, we made it through a pivotal week in the financial markets with rates looking much better for the first time in weeks. The FOMC, the Federal Open Market Committee, met Wednesday and they elected to keep the federal funds rate unchanged. That was expected. But they also hinted that there will probably be no further rate hike this year. They do have one more meeting in December. And Friday's BLS, the Bureau of Labor Statistics jobs report, was a miss, coming in at 150,000 new jobs created against estimates of 180,000. Equally important, the jobs numbers for the past 2 months were revised downward by 101,000 jobs. This is also equally frustrating because rates shot up in August and September because of those jobs numbers reported by the BLS, only to have them come back down to lower numbers later. This seems to be a trend with the Bureau of Labor Statistics. Also, average weekly hours worked decreased to 34.3 hours from 34.4. That seems like a small difference, but that equates to about 2 million jobs. It's a big number. We also saw the number of multiple job holders increase by 205,000 jobs, as many Americans are having to take on second jobs to make ends meet. These statistics are all signs that the economy is slowing, and as the economy slows, inflation will too. That's good news for interest rates. And this week they came down nicely. Here are the national averages. 30-year fixed rate conventional, 7.38%, down 0.5% from a week ago. Yes, we were almost at 8% last week. 15-year fixed rate, 6.75%. That's down 0.49. 30-year fixed rate FHA and VA, 6.71%, down 0.61 from a week ago. And 30-year fixed rate jumbo is finally under 8%, 7.75, down about 0.26% from last week. Moving on, there is an NAR lawsuit loss that could affect the cost of buying a home for you. This is big. Last Tuesday, a Missouri jury found against the National Association of Realtors and several other real estate brokerages, awarding a $1.8 billion verdict to the plaintiffs after determining that they conspired to keep real estate commissions artificially high. This case will definitely be appealed, and it may be years before it's ultimately resolved, but there will be significant impacts on the real estate market. In fact, it's already started in Washington State and many other states. For as long as I can remember, most states have operated under a cooperative brokerage agreement. And in that system, the seller pays a real estate commission, which is negotiated with the seller. There's no set amount, which is then in turn cooperatively split between the listing agent representing the seller and the buyer's agent representing the buyer. Buyers benefited from the structure because they didn't have to pay the commission owed to their buyer's agent. The crux of the case brought against the National Association of Realtors was that the seller received no benefit by paying a commission to the buyer's agent, who in many cases worked against the best interests of the seller by trying to get the best price and terms for the home. What wasn't mentioned is the fact that the cooperative brokerage system and the promise of a commission for the buyer's agent is what brought the buyer to the seller's property in the first place. So that was completely missed in this lawsuit. Recently in Washington State, the standard NMLS form, the multiple listing service, were changed, and the seller can now choose whether or not to pay a commission to the buyer's agent. But the buyer's agent needs to be paid for their work. So if the seller's not willing to pay a commission, the buyer would need to collect that commission from the buyer, increasing the cost to purchase a home significantly in a market that is already stressed by tight inventory, high prices, and elevated interest rates. Buyer's agents will now also need to have a frank conversation and a written agreement with their clients to address what their fee for services will be and how it will be paid, something many brokers will find uncomfortable. I will guess there will be far fewer brokers operating in the near future due to these changes. In most states, the cooperative brokerage system is still possible. The seller may still pay the buyer's agent commissions if the seller agrees, but future court rulings could eliminate that cooperative agreement. If that happens, then the buyer will have no choice but to have to pay the commission for the buyer's agent. This is an important case, and it's a significant change to the way real estate will be bought and sold in the future. Be sure to check with your agent, have a conversation with them about this ruling and the implications of it. I'll be available if I can answer any questions or help with your financial questions and story problems. You can call me 206-915-3742. You can email me eric@ericismybanker.com, or you can look for me on social media. Just look for Eric is my banker and you'll find me. That's all I've got. I'll talk to you later this week. Have a great week.